How you doing? My name is Todd Harrison. I'm the founding partner and CIO of CB1 Capital. And today we're joined by my friend Sam Brill, who's the CEO of Ascend Wellness. Ascend is a leading MSO with retail and CPG assets in Illinois, New Jersey, Ohio, Maryland, Pennsylvania, Massachusetts, and Michigan. Sam, thank you for joining us. Appreciate your time.
That was a mouthful. Thanks for having me.
You ain't seen nothing yet. Give me a little bit about yourself. Tell me about Sam Brill.
Well, I spent the last 28 years in finance and operations. And prior to taking this role, I spent 7 years at running a private equity fund, where we focused on finding inefficient companies, help bring financial discipline and drive operational efficiencies and profitability to ultimately lead to a buyout or merger at a higher valuation. And we were always searching for pockets of opportunity. And one area was the cannabis sector. And my fund at the time invested hundreds of millions of dollars in that sector. And it gave me a really deep understanding for the industry and the ecosystem. And in 2020, I led one of the early rounds, lending rounds in Ascend, and it helped the company expand its footprint in Illinois. And I've remained a steadfast investor and supporter ever since. I was invited to join the board in July of 2023. Actually, no, sorry, I think it was earlier than that. It was first quarter, maybe 2023. And then tapped by the board to be CEO in August of last year. And the mission was really simple. It was to guide the company through this next chapter where we focus on three key pillars: profitability, sustainability, and densification. And we've made a great deal of progress in those initiatives so far.
Thank you. And so this is the first time we're doing this format with Ascend. Really, the idea here is to dive a little bit into the foundational narratives and the special why you're there. And to start with, please talk to me about, what is a densification strategy and the timeline on that as you scale your footprint and what that means, to your business.
For sure. I'm not sure how that phrase was coined, but it is very key to the strategy. And to give some more context and background of what densification is about, I think it's important to point out that one of the Ascend's biggest strengths is the retail footprint. We did a great job of citing our stores and identifying and securing these prime, call it main on main locations in high traffic areas with ample parking in the most attractive markets, because we wanted the stores to be located on your way home, way to work, or where you shop. So it's part of your everyday life. And by prioritizing those great locations over the speed to open, which others may be prioritized, it positions us well long-term because the competition becomes more and more fierce. So that location and convenience matters more. And so the densification strategy started in late 2024. We had 39 stores, and we had a very ambitious goal to get to 60 stores in the medium term. And so far, year to date, we've opened 7 stores. We have an additional 13 stores in our active pipeline. So we plan to hit that 60 store number within the next 12 months. And we're only opening stores in our core markets where we have significant cultivation assets. Because every time we increase stores, it allows us to leverage our hub and spoke model. So each location is strengthening our operating efficiencies and driving our margin profile. And that's because it's going to help those vertical sales. We're going to sell more of our brands in our stores. That increases that fixed asset utilization. And I think this approach gives us greater control across our value chain. And it supports our consumer-centric mindset that's embedded throughout our CPG and retail initiatives, especially the opportunity to continue to build out and strengthen our brands.
Well, that's, so I appreciate that context, but, we've been in this space for a while now. I think we could all agree that where the puck is going is going to be all about the brands, right? And that's one of the elements I think of Ascend that is often overlooked by investors is your CPG leadership position in a lot of these mature states where you already have the competition. And, that would, imply you have, some SOPs in place that are working. Can you speak to that CPG portfolio and any performance metrics that prove this point?
Yeah, I mean, I'm very excited about that portfolio, and I'm very fortunate to have a platform to build on. Ozone is our flagship brand. It's a number one. It's a number one brand by units sold in New Jersey, Massachusetts, and Illinois combined, and those are extremely competitive markets. And then Simply Herb is a number one in sales and units in Massachusetts, which is I would say one of the most competitive and mature markets in the country. And I think it demonstrates our ability to compete and win in those competitive environments. And so when you have these flagship brands, I think it demonstrates that category leadership. And now we're leaning into launching new brands to grow and expand that portfolio. And the demand for Ascend's, brands, I think, is evidenced by the successful new launches. And one of the best examples is High Wired, which is our new infused flower brand. We just rolled these out. These are our 0.35 clips, and I think they've been very well received. It's already the number 2 brand in New Jersey, despite only launching in September. It became instantly top 3, the top 3 infused SKU in Illinois after it launched in Q2. And it's now put us as the number 2 infused flower brand by sales and units across Illinois, Massachusetts, and New Jersey combined in Q3. And we've come a long way. We started very early on just trying to get product into the market, but over the last few years, we've really consistently improved the quality through the excellence that we have at our cultivation facilities. And now we rank near the top in potency in every single state that we're in. And when you look at all the other important metrics that you look for as for quality, we're near the top in every single one in the states that we operate in. Yet, I think we haven't kept pace with our marketing and our packaging, and it really doesn't match the quality that's in the bag. And so we made a conscious decision that we have to really refresh everything that we're doing to really, it's a disservice to the people that really have driven the success at our cultivation facilities to continue to put it into the same packaging for what I would consider to be much lower end product from when we began. So to that end, we've released 420 new SKUs year to date, and we plan to hit 550 by the end of the year. And it underscores the exceptional work of our team, and their efforts are directly fueling the customer engagement. They're elevating the brand awareness and positioning us to win in increasingly competitive markets. And consumers, they consistently ask for our products. And we've built this great pipeline of new innovative products based on trends that we're seeing in mature markets. And we're targeting white spaces and segments that aren't offered in some of our core markets. And as noted, like the best example would be High Wired, the infused flower, where that was an underserved category in all of our markets. And last year we launched our edibles, our FN gummy line. And that was really received well because we took minor cannabinoids and we added them. So it's not just THC and getting high in the old indica sativa hybrid. The industry's evolving, and we curated specific effects for sleep, showtime, create, relief, chill. And that simplifies it for that user so they understand what they're going to get when they use the product. And that was received so well that we decided that we're going to expand that into vapes, because that is another area where you don't have these effects-based vapes. It's not very common. And we launched it in vape category. So here's like deep sleep, great way to go to sleep very easily. And that's really helped contribute to our significant increase in our effort brand share with these effects. Next week, I'm very excited. We're going to be launching our King of Queen Colas that's exclusive for our Legends members. And this was a year plus of development to get to where we are. It's going to be very, very limited release. We had, I think, 350 colas when we started in New Jersey, for example, and only 23 made the cut. And the master growers signed a card that goes into every single package where they signed off on the quality. We weren't messing around. This is stuff that had to meet a very, very, very high standard. And this is a great way to reward those Legends members. And then the other exciting thing that we're doing is we're launching a new full flower pre-roll brand called Honor Roll. It's going to launch in December in Illinois, and then early 2026 in Mass and New Jersey. And it really fits a segment that, you know, is evolving. People have, you know, they were used to just getting these lower quality pre-rolls that were made of shake, and people want a more like full experience. People buy high-end flower for a reason. They want quality flower. They don't want shake in a pre-roll. They want quality flower in a pre-roll. So we're meeting the customer where they are and delivering a new exciting product that we think is going to do extremely well.
Well, you know, having enjoyed your products, and I'm smiling because as you were telling the story of some of your brands, you know, we have this dinner every year in Chicago at the Benzing, I guess it's the Ignite It conference. Forgive my dog, he's trying to get in right now, but I'm not getting up. You know, we have what we call, you know, a good guy dinner the night before, which doesn't have to be a guy, but you have to be a good person. And it's really not about anything other than that. And, you know, so Sam was there. There's a few others. I won't name who it is, but he pulled out his, which was it again?
High wired.
The high wire.
The full 1 gram. These are 35s, but yeah.
Yeah. So suffice to say that some of the good guys, you know, one of them was missing like halfway through dinner. I walked outside to see him just contemplating life, and he was like, "Wow, that really just knocked me on my ass." And this wasn't somebody who was a novice. So, you know, some of these are triple black diamond. You got to be careful. But for the connoisseur, you know, you touched on a lot of points that made my ears perk. You know, I think the flower experience for somebody who is a natural consumer, it's really hard to. I mean, I don't vape. My wife, you know, likes to vape. Edibles, you know, with my tolerance, you know, I'd weigh 350 pounds to get high. I just like, you know, and I don't really get high from flower much either. I just, you know, it relaxes me. So as a flower connoisseur, you know, I appreciate, you know, what you're doing and what you said about how you're catering to, you know, that particular audience. I'm going to shift gears a second, you know, if I can, because I know we have 5 questions and this is supposed to be bang, bang, but it's hard because
I want to give you a sneak peek though for this, because you're talking about how strong these all test like in the 50+ range THC.
That's
so
we're
gonna do a little knockoff of our FN line. We're gonna be giving out FN off gummies to help take off the you know, the edge, because this could get you really high. So they're like 25 milligrams of CBD to help you kind of come down if you overdo it with the high wire.
Yeah, I think Sammy's still walking with a limp from that experience, and he might get some PTSD if he watches this and sees that eye again.
We'll have to get him some FN off gummies.
Yeah, well, there you go. And I know, and just to tease it, I know we're going to be going next week. You and I, we're going to go over to some of your New Jersey dispensaries, do a little undercover boss routine and see what goes on with customer service and really do a little taste test. So I look forward to that. But, you know, listen, we're sitting here. It's, you know, toward, I guess, the 3rd week of November. We all see what's going on in the universe, in the world. And as we sit here and await you know, the referendum on federal reform that the industry awaits, and certainly as I think the pieces have fallen in place from a story arc and the tough on drugs, and now shutting the hemp loophole and the vape gate and all of the messaging and the cartels and the crime rings, you know, to land with Schedule 3 as you know, as an entree to the halo effect there. That's what we're waiting on as an industry, I think, one and all. And we could talk about how, the legal definition of hemp had to change before rescheduling could occur. And all these other nuances, such as mainstream media and ABC running stories about how THC will be banned and how that could confuse investors as well. And in a very thin market, we're all wrestling with this alternative reality as we wait for, what I think we all have seen over the last 5 years is explosive growth in cannabinoid wellness and THC, but masked through different names, whether it's intoxicating hemp or cannabis. But a lot of red states, in particular, I think have had the puppy dog sale with THC and cannabinoids, and that dog is 5 years old now. Try taking a 5-year-old dog away from any family and see what happens. So I do think we'll look back at the hemp loophole as the great ungating of the U.S. cannabis industry in a very perverse and fucked up way. But until and as we get from here to there, obviously the focus is on the financials, the focus is on viability. I can tell you in full disclosure, we own Ascend. We think it's one of those names that has a lot of torque, will have a lot of torque upon federal reform, more so than many other peers. And I think you can speak to that because you guys are buying back stock yourself, if I'm correct. But optimization, and I've always said the companies that survive this status quo, particularly when hemp has taken half the growth, are going to be mean and lean coming out, right? But you can only cut your costs so much. You can only optimize so much. And at what point does that optimization manifest and trend into financials and this ungating that we're waiting for?
Yeah, I mean, when I was appointed CEO, the board was very clear. The task was improve margins, cash flows. That needs to be the focus. We're in a tough industry. We're facing all these headwinds, and we have to get in front of that. And so, luckily, again, very talented team at Ascend, and we executed very swiftly on what I think was an ambitious goal of cutting $30 million from the business in cost savings. And not only did we hit that number, we exceeded it, and we completed it well ahead of the time. So you're starting to see that flow through on the P&L, and we delivered mid 20% adjusted EBITDA margins in Q3, which was up 250 basis points quarter over quarter. And we also improved our adjusted gross margin, which increased by 300 basis points quarter over quarter to 46.5%. And all these improvements were achieved despite negative operating cash flows, negative operating leverage. So because we're facing this challenging market environment, yet in spite of that, we've been able to continue to get improved margins and be extremely disciplined about how we execute on our business. And one of those initiatives is just being better about routing our internal biomass away from unbranded products, bulk wholesale, and into more higher margin branded finished goods. And this allows us to execute on opportunities in these white spaces that I mentioned earlier and expand in categories within our brand leadership. And that will ultimately improve margins and improve verticality. And we're deepening our market penetration through this expanded footprint that we talked about with densification. And we're diversifying our product mix. And by introducing these higher demand offerings to meet the customer's needs, we're sharpening our competitive edge. And another successful thing I would like to talk about is our inventory right sizing. Our working capital was way out of whack when I took over. And this is one of the things where I think we really stand out within the industry, because we have one of the strongest inventory positions in terms of days on hand versus our peers. And I'm really proud of the way the team has managed the working capital to date. So we need to continue to do that and stay disciplined. It's very hard in this crazy environment. But I think we have that mental muscle to continue to be successful there. And lastly, our operational excellence and efficiencies through these targeted investments in the production, automation and in our canopy, that fuels our product pipeline and the finished good inventory positions that we have. And we've implemented automation for flower packing, vape filling, edibles, and pre-rolls in most of our states. And those capabilities are going to position us to stay ahead of demand in these exciting categories and significantly increase our production volume. And the upgrades are already demonstrating that impact by reducing labor hours and boosting output.
Right. Thank you for that.
Sorry if that was a mouthful.
What's that?
Sorry for the mouthful. Try to get it.
It's quite all right. Well, there's a lot to chew through here. I mean, certainly. I want to shift gears for a second to Ohio. My daughter's a senior at the Ohio State University. Obviously, it's a huge market. One of the bright spots, I would say, in the current landscape. I think it's the last biggest flip that we've seen, and we could talk about why that is. Probably a cooling of enthusiasm around cannabis reform since gas station weed has been on every corner. But I digress. But talk to us, Ohio. How's Ohio doing for you versus expectations? What has pre-rolls meant? And how far are you from Columbus? Because I'm going to be going out there soon.
Well, we have something. We actually have a store that's slated to open soon, right outside of Columbus.
Okay.
Yeah, so I'll send you the location. But no, Ohio has been the strongest retail market, within the Ascend portfolio. It's outperformed our expectations across the board, and our stores were always well positioned prior to the adult use flip, but because of that positioning, I think that's one of the main reasons that we've outperformed the rest of the market. We've outperformed the entire Ohio market by an order of magnitude on the retail side. So very pleased with the success we've had there. And I think part of it is driven by, we offer one of the more convenient and frictionless retail experiences in that state. And it sounds kind of like, well, what are you talking about? But the way that adult use was set up in Ohio was very frictional, in that it was a pharmacy market. You had to sit in a waiting room, wait for somebody to bring you in. You had this, it was nice because it was a one-on-one experience, but if you want to get in and out, it would take a long time. And for adult use, people don't have the patience to sit around in a waiting room and spend 15 minutes before you even get in and you already know what you want. We took down those barriers immediately, and we used our setup that we have in other states. And because our stores maybe were late to the medical market, it positioned us well to kind of easily transition to our normal style. And so customers can come in and come out and spend as much time if they want, that curated one-on-one experience, or get in and out very quickly. And I think that has really been refreshing for a lot of customers when, versus other experiences that they're having in the state. And then you mentioned pre-rolls. Pre-rolls launched in the middle of Q3. And the second we had them in the store, they flew off the shelves. And that's an area, as we talked about, it's been an area where we've had a proven track record of success in that category, and we have category leadership in all our states. So, we look forward to that opportunity to continue to expand in Ohio. And then as regulations allow, we're going to expand that product offering beyond just pre-rolls. There are a lot of limited things that Ohio is a unique state in the regs that they have. And one of the biggest things I think is not even products, it's advertising. They don't allow advertising. It's currently very strictly regulated, and it's very hard for people just to find their local store because you can't put the word out. It's hard for people to learn about the products that are out there because of all these restrictions. So I am excited for whenever they decide to take down that barrier and we can actually advertise to customers, and I think that will drive additional traffic. It might, people that aren't fully aware that it's available, you can bring those people into the stores, and I think that'll be the next leg of growth opportunity in the state. And I would say Ohio, it's been a key driver for Ascend, especially as we have all these headwinds in other competitive markets. This has been a nice tailwind for us. And what I'm super excited about is that we have 3 more stores that we get to open through our 10Bs, and that's going to benefit us and the market overall.
Yeah, no, Ohio is a great market, no doubt about it. The state by state stuff, as we said, took a pause. Ohio's been the last big flip. I know Virginia's coming, and that's going to help a select few. But obviously, the question on everybody's mind is, when are we going to see federal reform? And for context and for documentation purposes, at 6:07 p.m. on November 20th, 2025. So it's Thursday night, a week before Thanksgiving. And Sam and I are having this discussion after hours. In the last week, the MSOS ETF is down 37%. On the news that the hemp ban was going to be signed into law, and I think a lot of confusion around what a THC ban will be. But nonetheless, here we are, and not a lot of volume, and I think not a lot of participants. It's a very fractured market for those that are still in the game. But that could all switch very quickly if and when we see federal reform. And just to set the table, before I ask you about how you're thinking about it, these are my thoughts only. We talked about the story arc, the tough on crime, the hemp loophole needing to be closed and redefined before you reschedule cannabis. There's been a number of signals from the president, I think on 4 or 5 separate occasions, including an ECS video that he released about a month and a half ago, touting the benefits of cannabinoids. Wall Street Journal leak, the Free Press wrote in October. It was possible that we would see it by October, but most likely by year end. And then, of course, if it's not one thing, it's another. Charlie Kirk gets shot, who's a personal friend of the administration, and then you have a government shutdown. All of this has, I think, added to the confusion. And if you're looking at Polymarket this morning, the odds are actually right now, the odds are 6% that we'll see rescheduling this year. I can tell you, I took a snapshot of that and I sent it to 2 people who are pretty close to the situation in DC, who believe we're going to see it. And I said, this is 6 out of every 100 people, and 3 of them are on this thread. So, nobody's really expecting it, I think. But, the president has made assurances. Evidently, that was a common theme coming out of the event in DC that I was at on Monday, that all of the major CEOs all had a variation of the same thing. They'll take the president at his word, that assurances have been made, et cetera, et cetera. And it fits within the story arc of that we discussed. But if I'm not paying close attention, and I'm seeing a Republican administration and Congress ban THC, hemp or otherwise, because most people don't know the difference. And after the last 4 year ends, which have all been, different variations of getting kicked in the crotch, you understand the PTSD and why people wouldn't believe. That being said, we still think it's coming. The timing is uncertain, but we do think the president wants this, the industry on board for the midterms. We think he needs the youth vote, and certainly he could use a W. Not to mention, this was a promise that he made, and he likes to say promises kept. So that's the bull case. If and when we see it, how does that impact Ascend? We talked about the torque. We're long the stock. We think it has more torque than most, but tell us why.
I mean, for rescheduling the part, one of the things I'm most excited about is just a reevaluation, opportunity for the whole industry. I feel like Ascend in particular is undervalued, despite the fact that we have an extremely strong balance sheet with $87 million in cash at the end of Q3, no debt due until 2029. We recently completed a traditional mortgage at 8.5%, competitive interest rate. We achieved the $30 million plus in cost cutting. We have this large scale densification initiative in front of us, especially the margin and vertical opportunity that comes with densification. We've proven our ability to, cut cost and be disciplined. And, and then operational excellence, I think, is starting to permeate from what we've achieved. Yet Ascend trades at one of the lowest multiples relative to the rest of the sector. And we don't believe a company with a strong balance sheet, operating cash flows, industry-wide leadership metrics in retail and CPG, plentiful opportunities to reinvest that cash inside our core markets with incredible ROIs, should be trading at one of the lowest multiples in the cannabis sector. There's a clear valuation discrepancy. And that actually led us to aggressively buy back our shares since December of last year. We've purchased and canceled 15 million shares to date, which is 7% of our outstanding shares at an average price of 30 cents a share. And we continue to evaluate what's the best use of cash at all times. And M&A right now actually seems like a potential fulcrum opportunity for us, because there are a lot of attractive assets for sale in our key markets, and those represent an outside accretive ROI opportunity to reinvest in our business. So, that would significantly, that would help us significantly increase our dispensary count and should lead to better capacity utilization and provide operating leverage, which should improve margins and operating cash flow, all the things that I've been talking about. So it's super exciting to see these opportunities, in front of us. And then on top of that, on top of the revaluation opportunity, you look forward to all the other things that rescheduling could bring. Number one is just clearing the unfair 280E tax burden, normalizing, capital markets for cannabis, allowing better cost of capital, more traditional financing options, potential uplisting, and, potential for customers to finally use credit cards. Customers can't use credit cards right now. We've seen in some test cases that customers spend 20% more when they have the ability to use their credit card. So I'm excited to see what that can do for the business. And I think all these factors would increase our ability to expand our business organically and inorganically. But I mean, the last point I would talk about is really, what you mentioned, which is this closing of the intoxicating hemp loophole, which could have some significant implications for the industry. It's estimated that it's a $20 to $30 billion total available market. So the TAM is $20 to $30 billion. It competes directly with the regulated market, but it competes with a significant advantage because it's unregulated. They could cross state lines, so you can get, those economies of scale that we all wish we had in the regulated industry. And they can accept credit cards. So this new legislation, it's currently not going to go into effect for another year. So we'll see if it ends up actually being what it is or what it looked like in that bill. But a full ban or a partial ban, if any of those things were to take effect in any way, it would significantly increase that TAM that I talked about for regulated operators. And I think it will help alleviate many of those pricing pressures and, sector, the real competitive, like downward pressures that we're all feeling. And I'm very excited about that prospect.
Yeah, I mean, it's like we said before, I think it's one of those things where we were, bang on, dead on balls accurate, I think is the phrase, in terms of the growth of the market. It's just been bifurcated. And I think along the way, it's burned through a lot of capital, growth investors, value investors, retail investors. But the thesis itself, the cannabinoid wellness thesis, is alive and well. And I think that genie is out of the bottle. I look forward to the day. I don't profess to know when it's going to come, but we've had enough conversations to know that you can't eradicate all of the bad actors unless you give them a good actor as an alternative. Regarding hemp, I think just from what I picked up in DC, It's going to be an uphill battle, for them to get something legislatively done with Mitch McConnell, there and Andy Harris and others. But I know there's an effort, and if that effort manifests, it probably looks a lot like 10 milligram, per unit caps for beverages, which I know the cannabis operators, are okay if that goes away, or at least I think most of them are.
No,
But
I will tell you that we are like, look, I'll be honest. Most customers don't come to our dispensaries to buy drinks. There are many reasons for that. The regulatory restrictions, you can't put things on those shelves so customers can't see the product. But at the end of the day, I think customers already wired to go to the liquor store or the supermarket and buy things like beer and these beverages off the shelves. And actually what we have found is that a lot of people that perhaps view cannabis in a certain way, in like a negative way, once they get used to trying these beverages and enjoying them, it breaks down that barrier. And ultimately, many of them end up going to a dispensary as they expand their horizons beyond the beverage. So I think it could actually be additive to our industry if that part was carved out.
Yeah, well, two things. One, my point was flower and vapes are never going back, right? Like the reality is, up until 2018, there was no such thing as intoxicating hemp. It was called cannabis. Hemp is used for rope, animal seed. Every part of that plant has an industrial use case. It's why it was banned by the robber barons initially, but that's a different conversation. But the truth is, if it gets you high, it's cannabis, even if it's called something else. And I think that genie is out of the bottle. If there is that carve out, if there is that push, if it is somehow successful, and one of the lobbyists I spoke with in DC kind of laughed at me. She said, this was the worst kept secret in DC. Everybody wanted this loophole closed. It was never intended to legalize cannabis nationally. And now that it's closed and differently, the legal definition is different. It opens the door for the rescheduling, as we discussed. But if there is a carve out, I think, you lose beverages, which I think I think it's a funnel, to the cannabis experience. I think the question will come around gummies, like what channel does that go in? But I don't think flower and vapes are ever going back, at least legally, nor should they. And that's got to be additive to the business with or without rescheduling. So with that, because I know that this was designed to be like quick snippets, but hard to when you have a conversation with a friend. I know next week we're going to visit some of your locations in New Jersey. I'll be walking over. I'll be limping back, but we're going to have a good story to tell.
I'm looking forward to it.
As do I. So thank you for your time, and I'll see you next week, Sammy.
Thank you. Looking forward.
Yeah.